Hello everyone, it's me, the Boss Hog, and we're back. Technically, I'm still on holiday, but seeing as it's been a whole month since my last video, I didn't want anyone thinking I was dead or worse. So we are back. I'm still on holiday. I spent the first half of this month super busy at work, and then the last couple of weeks I've been enjoying a proper holiday with my wife and daughter and in-laws as well. So there's a lot to cover in this video. I'll leave some links in the description so you can ignore sections of the video if you wish. I expect this to be a pretty long one. We're going to look at all of my buys, sells, and dividends during the month. I'm going to touch on a few earnings updates and give my thoughts. And then we're going to see how I'm performing and doing in life more generally as well. But like I say, descriptions, if anyone wants to skip any of those things in the video description, let's do it. Alright, so worth adding that seeing as I am away, I don't have my mic with me, so apologies in advance if the audio quality is a bit poor in any way. I should be back to normal setup next week, but like I say, I kind of wanted to give an update, seeing as it's been so long since my last one. Just a few updates in terms of dividends really over August. It's, I think, my quietest month other than January. I just don't have very much in there, and what I do is tends to be, you can kind of see here. So ASML, one I think is familiar with that. Elixir here is a kind of small challenger consultancy kind of company. Actually, a pretty solid dividend. Fine. This is my Canada ETF, but I've only got one share in it at the moment just because I sold it out to buy some tech ETF when the tech was sort of struggling a few months ago. So, okay, it is what it is. This here is a pretty new position for me, honestly. I'm quite happy to get £4. It's just a fairly defensive ETF infrastructure that I plan to add into, honestly, pretty slowly when I can't find anything else to do so. But I thought it would be good to have a little bit of infrastructure exposure. And then this one is a UK high quality ETF, I would describe it as. Not a massive ETF, but not tiny either. And for me, it's just exciting to be able to be buying high quality UK companies. I think it's kind of a little bit undervalued at the moment, but not by a ton. And my plan here is just to basically average into this mediumly aggressively in the sort of medium to long term to build up, a couple of percent in it over time. So actually quite happy with this dividend at the moment. Now my sales are pretty interesting. Basically, I decided to sell Games Workshop, and you'll see them here and another one down here as well. And here, you can see here, like together, this is 4,500, give or take. My average price here as well, just over £115. Honestly, I was just, I really liked what I was seeing with Scottish Mortgage Investment Trust primarily, as well as opportunities to buy into a couple of other funds that I thought were a bit cheap. Also, as well, at 115, I just thought it was quite expensive. Like, I spoke about the Games Workshop results previously, and don't get me wrong, they're really solid. But it was trading on sort of a 28 multiple, which even for a company as high quality and, with such great financial metrics, I just thought was fully priced when the rest of the market was going down. Since then, I mean, the share price has definitely reduced sort of, I think we're down to about 8% at the moment. So I'm sort of reasonably happy with this. I think, like I say, I think it's a really good quality company. So I'm going to keep, a more mid-sized position of Games Workshop. But I was happy with this sell, honestly. I thought it would be better used elsewhere. And a month in, I'm still very confident in that position. So that's fine for me. I decided to sell all but one of my shares in digital security, realizing a fairly small profit, but a profit nonetheless. And again, just put it back into other funds that I felt like had more upside and were trading at a significant discount in terms of their net asset value. Nothing wrong with this fund. That was my decision, basically. It was more of a buy-focused decision than anything else. Then I decided to trim my position in Amcor. I did a single transaction. I don't know why sometimes my brokerage decides to put in a second line. It's slightly annoying. I still have 650 shares in Amcor, so I traded less than 10% of my position. If I'm honest, I was slightly underwhelmed by their quarterly trading update. I think they're taking longer than I would have expected to get up and running. There is some light at the end of the tunnel, but I think a lot of the semis, unless your name is Nvidia, are just taking a little bit longer to recover than maybe I would have expected. I still think it's a pretty cheap stock, to be honest with you, but I thought at 29 it was a fair sell opportunity. Again, I didn't rush into it. I didn't sort of sell everything, but I just thought it was an opportunity to trim some profit. My buy price here is like $21, so again, very happy with this kind of. It's pretty good return, and it's still one of my largest positions, as we'll see fairly shortly. Consumer staples. I've spoken about this before, but it's kind of similar to the infrastructure ETF, really. It's sort of just one of those positions I'm almost forcing myself to have. So when there was an opportunity to redeploy elsewhere, I decided again to take a very modest profit here. I can't remember exactly what it was, 1% or something like that, and just put it elsewhere. Then you'll see here, this is just some like rounding basically. When I tried to buy into this position, my brokerage told me I was a penny over and basically forcibly sold a share. So very annoying, but okay, fine. This one's a bit. This one maybe is worth talking about. So I took a bit of a haircut on this of about £500. So you know it was like down 20% or so. Um, and honestly, I regret not selling it ages ago because I'm just completely underwhelmed by the ETF itself. Like, I think the thesis is fine, which is that I want to be into clean energy in the future, and I don't know the first thing about it. So why not get an ETF? But you know, originally this was really it ran up a lot on plug power, or it was massively overexposed, and that wasn't really something that I was interested in anyway. And since then, I basically just watched it drift down, and I've just kind of fell out of love with it, really. I still want to have a clean energy position in the future, but this ETF isn't doing it for me, frankly. I know it's reasonably popular with like Discord and UK investors generally, and I think the thesis is fine, right? You want to have clean energy, that should be something for the future, but I'm just not seeing a bunch of stuff in there. I think also Enphase, it got pretty beaten up from those results. And I just look at the ETF, and there's just not much I really love about it. Again, I wish I'd sold it sort of 3 to 6 months ago when things were even cheaper. And I think I could have maybe put more into some of the ETFs I did end up buying, but I decided basically I've lost confidence in the ETF, decided to sell it, and that's that. This is also some rounding here. Oh, sorry. Yeah. So this is some rounding. Basically, you'll see in a second, but I'll just give you a little preview. I opened up a position in a semiconductor ETF, and whenever I open up a new position, I tend to just like round down all of my positions because eventually it kind of annoys me, having like 1.07159, etc., etc. So I basically just did like a bunch of very small trimming on one or two of these. Then I did something fairly silly where I think I basically sold instead of bought a stock, which was again pretty silly. So just I was basically just trying to do a little bit of organization whilst I was busy and just did a couple of silly things I didn't mean to do. But ultimately here I was just trying to free up some cash and move some things around into the semiconductor ETF. Um, and that's basically all of it. Those are my sells and the reasons for my sells. And then if we go on to the buys here, so you can pretty much just group these into three. So Scottish Mortgage, Global Mining, and the semiconductor. So I'll start with Scottish Mortgage, which I still believe, even at this kind of buy price, so £7, is just a really good buying opportunity. I'm now actually like my average buy price is now sort of 7.10, so I mean I'm basically buying flat. But I just look at the portfolio and I basically just think SMT is fundamentally misunderstood as an investment. Like I regularly see it even on investing websites and things referred to as like tech or a Nasdaq comparison or high risk, and I don't really see that. Like first of all, tech isn't even its biggest slice. Consumer discretionary is. Yeah, it's like 30% private, but sure, the way that they price their private holdings, I think, is totally fair and valid. And also, a lot of their private companies are like multi-billion-pound companies. They're not like startups or anything. Um, and I kind of like the general direction of travel, especially as Moderna sort of reduces in importance, which I've never really loved as the kind of one of their largest positions. For the longest time, it was their largest position. As Moderna comes down and things like Tesla, SpaceX, ASML, of course, and a handful of others as well, kind of grow in importance. I really like the direction of travel for SMT. By all accounts, the discount to net asset value looks massive at like a 25% discount. So very easily, to me, this is like a 25% upside, not even assuming any of the kind of bets pay off. So yeah, you'll see very shortly SMT is like very high now in my portfolio, and I just plan to keep on buying basically, even though I'm basically flat. To me, there still looks like there's tons of upside here, so that's the plan. Similar-ish in a way to global mining, which has kind of been beaten up or trading sideways on worries about China primarily. But again, I sort of want mining in the long term. So for me, just being able to acquire this is great. I didn't necessarily plan to have as much in the mining as I currently do, which I think is about 4 to 5% of my portfolio. At least not this quick. But again, I liked what I was seeing, and I wanted that exposure, so I decided to move whilst it was kind of being a little bit beaten up. And then last but not least, here is the Vanex Semiconductor ETF. Now, I thought about buying this ETF honestly for months. I first looked at it probably, I don't know, 4 or 5 months ago. And the reason why I didn't buy it at the time was because it was like 16% Nvidia. And I mean, I think Nvidia is like pretty remarkable, but at the same time, it continues to just look really expensive. And I think like as soon as any bad news hits, Nvidia is going to tumble. But at the same time, first of all, I do kind of want exposure to those exciting, fast growing companies. I do really like semiconductors. I did sell out of my share in Micron a few months ago at sort of 68, 69, for similar reasons actually to sorry, Amcor. In as far as like, I think it's an okay investment, but I just think people are a good year ahead of themselves at the moment. So Amcor is slightly different for me, but that was my part of my decision for selling Micron. So, I basically did sell out of a fair chunk of semiconductor, but I do really like the thesis still. Outside of Nvidia, which is now only 12% of the fund, I really like the rest of their top 10, maybe with the exception of Qualcomm, which I think is overly exposed to mobiles and handsets, which are obviously still struggling, I think. So yeah, I just decided to sort of grin and bear it. I bought this when there was a little bit of a fallback following the Nvidia results or whenever it was. Um, and in fairness with you, I seem to have timed it quite well, but it does seem quite volatile. And I think again, it's a relatively heavy fund. So if one or two like Broadcom doesn't do well, or TSM doesn't do well, or obviously Nvidia doesn't do well, then that's going to be a problem. But their top five have all got between 8 and 12% exposure now. So whereas in the past Nvidia had 16%, and the second place only had 8, so it was just too much of a play on Nvidia. Since then, it's sort of become a bit more broad, and so I decided that now it's an acceptable play basically. And for me, like, even if this goes down and we keep on building our stake, that's no bad thing, because again, I think semiconductors over a 20-year period, which is my sort of time horizon, is going to be absolutely fine place to go. Everything else down here is just dividend reinvesting, basically. So don't need to spend any more time on that. So yeah, that's all my transactions basically over the last month. I have mentioned that I'm sort of looking in the latter half of this year to start adding capital again. I now expect it to be the end of September. I basically had a very expensive last few months, which should be coming to an end toward the end of September. So we will start aggressively adding money again from, I'm not entirely sure when, but toward the very latest, sort of the first week in October. But realistically, I think it'll be about the 20th of September. So that should be awesome. Looking forward to that a lot. If we now whiz over here, so our portfolio value in trading 212 stands at 141.63. Very close reconciliation this month. Honestly, portfolio value has been sort of trending downwards just because we haven't been adding more, and it's been getting pretty beaten up over August. I think it's worth saying as well, and you can kind of see it here with the fall, that August for me was not a pretty month. I underperformed all of my benchmarks basically. At one stage I was down like 8%, finished the month sort of down 4.5%. But did sort of pull me back into the into the middle of the benchmarks. Previously, I'd been really sort of competing with the S&P to sort of who could be first, but I lost a lot of ground this month. I would say that foreign exchange continues to be super unhelpful, and I do personally believe that there is an opportunity there for a correction. But it is what it is, and so we're just trying to navigate it as best as we can at the moment. So in a way, I suppose on reflection, a little bit disappointed with August. Not because I didn't maybe expect a fall in stocks. Like, I thought Genius and Games Workshop especially were maybe fully up with events, and they're sort of two of my 5 largest positions. And then also with the currency as well, again, I've been through that now. It seems like a perpetual thing. But I think it was the fact that, like, I underperformed my benchmarks. That's always disappointing. However, on a flip side, again, because I was so busy, I just didn't really have too much time to worry about it. So that was also a good thing in a way, I suppose. You can see here as well what happened to my profit, and this was the other frustrating thing in August. Like, in early August, it looks like Genius released their results, and out of market trading showed me turning green on my position. Right, it went up to like $8.30 or something like that, and I'm like, oh my goodness, I'm gonna be green on my largest bag holding position. I'm gonna be at an all-time high, And I was so close. I was like £100 off from my all-time high, and then it just cratered. Basically, everything cratered. Like Genius just didn't deliver when it result. By the way, I thought their results were fine. I do think 8.30 was probably pushing it a little bit, but then to see it fall back down to like 6.5 again was quite surprising, to be honest. But again, it was a difficult August. And then since then, you can kind of see here we did recover in the latter half of August, so that was promising, shall we say. So this is how now our top positions are looking, and some interesting changes. The biggest change here is Scottish Mortgage, and just where I was buying so much over August, it's just really shot up. And again, my buy price is like £7.10, so I guess I'm down a couple of percent on this position, but feel very comfortable with it, and I will continue to buy. Amcor here at one stage was the largest position, but fell back a little bit on Friday. Genius we've already touched on as well. So that's fine. I will just say, yeah, I thought the results were fine, broadly in line with expectations. It wasn't like a blowout or anything, so maybe the market was getting slightly ahead of itself. I'm not fully sure. It has been on a bit of a run recently. Upgrades, the extending the contract with the NFL was a big one, but I still am very happy with it. I will also say as well that ATT, Alliance Technology Trust. So I timed this really quite well, and within 6 months, I'm already up sort of 25-30% on my position. I think I have like a 212, 214 average. However, again, I was doing some reviewing on this sort of in preparation of adding some more capital in September. And to me, this very clearly is like, again, 10% discount against net asset value. I was disappointed in myself for not being a bit more aggressive, buying in the sort of low £2 when it was, again, trading at like a 20%, 15% to 20% NAV discount. But it still looks like it's got a little way to go. And even though I would sort of be averaging up in a sort of fairly mixed bag, I feel like this is where I want to mature as an investor and say, actually, it kind of doesn't matter what my green or red position is. It either makes sense to buy it now or it doesn't. And for me, Allianz does make sense to continue to buy it. So honestly, when I start adding capital, I think I'm going to have a very easy number of buys, which is just going to be SMT and ATT. That's going to be where most of my money goes. I think unless something material changes, that's sort of my plan at the moment. I mentioned mining again. This is probably bigger than I was expecting it to be, but just looked like a good opportunity. We're very fractionally red at the moment, but basically flat. Similar with real estate, actually, I'm only red here by a few percent, and that's only because of the foreign exchange. So now, because I've not been buying individual shares since my wife started her new job almost a year ago now in private equity, actually the ETFs have started to sort of rise up. So that's been interesting to see. So I have to actually go fairly far down to find my fourth largest positions, which is Phoenix. Pretty red on this position, honestly. A £6 something, £6.10 average here. I mean, UK insurers have just been beaten up for various reasons for the last sort of year, which is, I mean, I've been mentioning for at least a year that I felt like UK insurers were a really good bet because they're defensive and they offer massive yields. And especially now, like all of the UK insurers are offering sort of a 7 to a 12% kind of dividend yield. So, I think Phoenix are offering a 10% yield within that. I'm looking forward to next month because I should be getting like £260 from that dividend, so that'd be nice. I'm just going to reinvest it basically. To me, it's a very nice 10% a year return. I do hope that it'll rise up. And for me, it would be exciting to see one of two things from Phoenix's results when they're published in mid-September. Mention of a buyback because they have a lot of cash that they've been sort of looking for buying opportunities and haven't really found a ton of them. Or news on acquisitions and growth, basically, from that perspective. So either one of those scenarios, I think, could provide a nice lift, especially a sizable buyback. I think that's actually, at this kind of level in share price, I wouldn't mind seeing that. We'll see. And then next, we've got our small cap position. We're modestly green on this, but again, actually comfortably green if we exclude for FX impact. Yeah, I think this ETF is basically fairly priced. I wanted it because I like having small cap and mid cap positions, especially across an ETF where I didn't really have much exposure to US small caps. So this is good. I think the ETF is more or less fairly priced at the moment. And to be honest with you, I have been thinking about moving some of this into Alliance if they sit in the same ISA. I may well do that. I was really on the fence on doing it on Friday, but I was at a water park with my family, so it made buying shares a little bit challenging. but I may well do that next week, depending on that. Yeah, I may well do that next week. So tune in for more there. And then lastly, we've got Huntsman here rounding out the top 5 in terms of individual shares. I'm down a few percent on them. I think about 5%. However, this is actually my most profitable play and my third return to Huntsman. Previously, at one stage, I had about 20%, 25% of my portfolio in Huntsman. And then, an activist investor took like 10% stake and it just went rocketing. Still my best performance when that happened about 2 years ago now. My best daily performance was when that happened. It was amazingly good fun to see just literally £2,000 just get added to my portfolio several years ago. Huntsman's been on a bit of a journey, I would say, honestly, for many years. It had like the Albemarle settlement, but then it also sort of had restructuring in a way and sort of moving its focus to be more sort of a quality rather than quantity output. So, its margins have grown, but its revenue shrunk. So it tends to sort of get overlooked because it doesn't fit nicely into sort of the growth that you want to be seeing. Then it decided to offload one of its 4 divisions. So that's basically been taken out as well. So honestly, it's a fairly difficult business chemically to get your head around before you even get into the financial situation. However, again, they have been using that Albemarle settlement, which was sizable, to buy back stocks, so the EPS has been benefiting. And I do remain quite confident in this for the medium to long term. So actually, I will be reinvesting my dividend when I get it in September and continue to do so in Huntsman for anything under about 32. Once it gets past 32, I'll just let the market do its thing. So that should be good. Outside of that, just one or two things then to mention. Salesforce, I've been thinking about Salesforce at the similar time to when I sold Micron and decided to hold it. I'm a big fan of Salesforce myself. I've come across it professionally before. I think they've built a really nice suite of products. And I thought their results were on the better side of good. I wouldn't quite call them like excellent or a blowout or anything. I think that would be too much, but they were definitely solid to good results. And I think the market reaction of sort of another plus 5% out of hours probably about right. I want to be holding these until at least 250. But actually, like when I was reviewing the results, I think there was a lot to like. Honestly, I think now that they've started to reduce some of their wastefulness that they had in their earlier days, and the stock comp, it's starting to look like a really well balanced business. They've sort of got like 10 billion in revenue, and that's split across 5 segments. And the smallest one is like 1.2, and the largest is sort of 2. And it's just starting to come together basically. Like I see, the Slack integration is starting to happen. I've always been a big fan of Tableau. I think that the way that the visualization tool links into the CRM tool is exactly what I'm seeing in terms of wants from my sort of sales directors and those kind of people. And again, I work with CRM systems and billing systems specifically. And this has just not been anything new. You have like Tableau, but you also have like business objects or ClickView, or like the visualization of data has been a necessary thing for many years and probably quite poorly served. And the dream is to basically give end users the ability to basically easily produce their own pretty diagrams and their business cases. But no one's really done it as well, I don't think, as Salesforce. And again, I think that they've not always performed optimally in the past, but I really like their general direction of travel. So I think like the more I think about this, the more I do want to hold on to it, even though it's had a really good run up in 2023. I think it's got further to run basically, and I feel like as an investor in my earlier years, 2021, I would have been quite poor at backing my winners. I probably sold Facebook too early as well, to be honest. And one or two other decisions I've made have been like selling out too early. But here I like what I'm seeing, so I want to kind of back that horse, even though I'm fairly comfortably green now. And yeah, just see where it goes to, basically. So that's my decision there. We've already touched on Vanex, so I don't want to spend any more time there. I would just say legal in general. Similar to Phoenix, this has been pretty badly beaten up for various reasons, but I still like what I'm seeing. Obviously, their CEO is going to be retiring. He's a bit of a legend, so that's a shame. But at these kind of prices, it just looks really crazy cheap. Now, their results were pretty interesting because they had a couple of caveats. The first caveat was their investment return. And like anyone with assets under management at the moment, in the state of the market for which the financial period related to, it was pretty bad. So they were sort of saying that, in the long run, our investment returns will even out, but this is the impact. I was like, okay, well, fair enough. Like, similar to T-Row, right? I can give some allowance for that kind of argument, fine. But then they also had a significant write down on them getting into modular homes, which was a silly decision, really. Just moving away from their core competencies, and depending on exactly how much consideration I gave for that write down, as well as their investment returns. The price to earnings here is anywhere between about 8 and 18. So even at like the most gloomiest, it's not terrible. And for me, if I was still buying individual shares with the dividend and everything else, I would absolutely be buying Legal in General and Phoenix. Maybe Aviva as well. Probably had the best results of the UK insurers, I would say. But all of them similarly beaten up with absolutely huge dividend yields. And again, I'm looking forward to receiving my Legal in General dividend also in September, which should be quite significant. I think I just want to round off with Medical Properties Trust. 50% red on this. I continue to be not really accepting the bearish arguments. There was some interesting development where a court, I think it was in California, blocked sort of a debt to equity swap with one of their distressed clients. That was definitely unhelpful, because up until that point, I actually thought that MPW had done a pretty good job defending against the short seller attack. I mean, it's still super heavily shorted, but they kind of came out firing, explained their situation, literally have a court case against the main short seller. To the point that I would say that the court case implied that the short seller was verging on fraudulent, kind of trudged up their history of being a fraudster, and really sort of did a bit of a character assassination on both the individual and the fund itself. So I thought that was effective. But still, I mean, I still take the position here that at these kind of prices, it just still looks so cheap. I would say that my own price target in MPW has kind of gone down from $21, as I had originally, to more like 16 at the moment. But I seem to always feel like the share price should be about double what it is. Maybe I'm just completely misguided. It definitely has been taking some licks at the moment. Two of its larger hospitals are financially distressed, but still, dividend is well covered. Restructuring of debt looks solid and on track. I just don't really see this level of being beat up, to be honest. And I keep watching videos on it and stuff, and that tends to be the general consensus as well. Or the other consensus, of course, it's just too high risk. I'm staying away from it. But for me, again, I continue to be okay holding this risk. I have previously sold down with massive write downs. So I mean, I remember selling GAN a few years ago because I just had lost confidence in the management of that company. So it's not like I won't do it, but I don't want to do it because, again, I'm still relatively confident. Obviously, they did reduce their dividend, which I suppose restored their dividend yield to something not obscene. But again, I was okay with that because, I think preserving cash when you're under attack is no bad thing. And I guess I continue to hold for the long term still. So we will see. I think that's everything in terms of the portfolio position I wanted to touch on. I will just make one more declaration, which is that this month I decided to move Scottish Mortgage Investment Trust from a technology sector, which is where they were, into ETF. I think that was just a legacy thing because other than SMT, before my wife started her new job, I didn't have any other ETFs, and obviously SMT itself is an investment fund rather than an ETF, so it was kind of a little bit different to the ETFs. But I kind of, because of the fact I continue to buy SMT, and I group them when I talk about them as an ETF, even though they're not, I'm clear. I just decided to make the change. So actually, it made my technology slice over here reduce quite a lot, and then my ET slice go up. But what also happened is that, where in the past I was reporting them as technology, I decided to move them to consumer discretionary. And I know it's kind of what I touched on sort of 10 minutes ago, where I think it's like, the more you understand about SMT, the less it's a tech play. It's not a tech play. They're kind of thinking about the future, and actually at the moment it just happens to be that more of their future focus is on the consumer discretionary side rather than the technology. So actually this had quite a significant move on a sort of self-imposed rule that I had, which was that I don't want technology to be more than 50% of my overall pie. Previously, before this was running at like 44%, right, because of the size of SMT. However, by moving into consumers discretionary, what's sort of happened here is now this slice is massive because it's basically, Games Workshop, SMT, and one or two others, which are still pretty big positions. I think it's somewhat arbitrary and, basically up to you how you decide to put your slice together in terms of sectors. But that's my decision, and for those reasons, basically. So I think that's just worth addressing because that's quite a significant change. And then I'll just round out with the dividends, which is that, again, we've already touched on it, but for August here, very quiet month. And actually, already in September, just where I've received like one or two dividends, already a little bit better as well. So we will see. I also expect that in September, I'll overtake 2022 for my dividends. So that will be exciting. And then you can kind of see here the direction of travel. So I guess actually not quite September. It'll be pretty close though, because I'm expecting a pretty good September, so we'll see. But that will be exciting because even though I've grown my investments, I've actually been taking a less dividend focused approach to investing. So as a yield, it's actually reduced. And again, this is one of my favorite graphs to look at, just the dividend income over time. So I think that's everything for now. Oh yeah, and just I suppose I will just finish on one of my newer. By the way, I've got another thing under development, but we'll get to that another week. So comparisons by discrete year. We did fall slightly further behind because this is obviously an extension of the month-on-month performance. But again, I remain relatively happy. Underperforming the S&P is not ideal, but pretty comfortably ahead of the other two. So again, I think this looks okay. I am also considering having a monthly video. One or two people of Discord have got like very snazzy outputs of their monthly file. I might do something similar where we talk about this in a bit more detail. But for now, I don't think I have anything else to mention. I mean, that's a good 30 minutes that we've just been talking already. So I'm going to leave it there. Any questions, etc., let me know. But now we're going to move on to my personal updates and how we're doing with my Betterment more generally. Let's do it. All right, so in terms of Betterment dashboard, quite a lot to cover again, just because it's been so long since my last update. So in terms of contribution to wealth, broadly speaking, I'm happy because we're 10% ahead of target. Again, this is the one that we have most control over because it's basically what we're contributing, not how the market performs or anything else. So actually, of all my targets, financial targets, certainly this is one of the most important ones to hit. And yeah, I'm really pleased with how we're performing, especially because of the fact the last few months have been challenging, adding more capital to it. So that feels really positive. Outside of that, I will just flag, and I've raised with my wife already, but for whatever reason, her company didn't pay into her pension pot. I don't know whether this is everyone that works for that company. It is an American company with a fairly small and new HR UK understanding. Hopefully, it's nothing too untoward. I don't think so. But it seems a bit strange. And even like the month before, so in July, they paid in a really weird way where normally they were like paying, the 5th of each month, sort of May, June was all the 5th. And then at the end of June, they paid for July. So that was already a bit weird. And I was like, maybe they're doing this for some strange reason I'm not aware of, like holidays and stuff like that, right? So I was like, or maybe they've moved it toward the end of the month where my employer does at the end of the month. So I was like, okay, let's wait and see. But no, nothing came in for August at all. So that's actually our contribution to wealth at the moment is £809 less than it should be. Raised it with my wife already and basically asked her to resolve that with her employer. We'll see. In terms of total wealth, I'd be surprised at this point if we hit our target date here just because the market underperformance. But again, we're not going to be too disappointed with that. In the long term, I'm hoping that these targets will all even out because they're based on long-term stock market performance. We'll just have to wait and see. A couple of updates still though. So I've decided to move my daughter's junior ISA to Hargreaves Lansdown. I wouldn't usually have done that because normally Hargreaves Lansdown are more expensive, but more legacy. But they basically have an offer at the moment where they're not charging for management fees, which over the course of like 15 more years is worth about £2,000. So it just seems like a thing to do. So I've already raised everything. I'm into the Hargreaves Lansdown portal already. I'm basically waiting for the migration to happen. So I'm going to prompt Hargreaves if I don't see any movement soon. But again, these things typically take several weeks, so it's fine. Also, as well, I'm not sure how much I can say about this, other than so I'm going to keep it fairly general. But my wife has, in writing, a commitment from her workplace for a promotion as well as a pay rise, and there's also a bonus attached to that as well. Basically, they can't do any announcement at the moment mid-year because it'll be upsetting for everyone else and basically goes against their rules of mid-year promotions and pay rises. Which was upsetting my wife, and basically she went to tell her manager, and he agreed it was basically kind of arbitrary. So as a compromise, they've committed to doing stuff in the new year. For now, I think that's all I want to say. I don't want to get my wife into trouble or etc. So, but we were pretty happy. I sort of said to her, like, it sounds great. Are you happy? And she said, yeah, I am, specifically because of the fact it sort of makes her feel like she is being appreciated and everything else. And again, like the bonus component of it is almost to like make up for the last few months. So we do expect it to be fairly sizable. But again, I'm not sure how much more detail I can go into than that. So let's leave it there for now. Also, as well, I was doing some numbers where at the moment for the last few months we've been trying to overpay our mortgage. Nothing substantial, but actually, several £100 a month. So it does kind of add up a little bit. And I ran the numbers in terms of how much this will reduce our mortgage by, and basically it turns out that we would be able to pay off our mortgage in 14 years. So, and then I started to realise this would mean that it would be when I was 50 or just before I'm 50. So I spoke to my wife about it and said, actually, wifey, is it still something you want to do? Because my wife wanted to do this previously, and I sort of said, the interest rates on mortgages weren't that expensive, better return in the stock market, we need to hit our ISAs, etc. But since then, like my wife especially has seen a couple of significant jumps in pay. And I sort of was also renewed motivation, shall we say, by seeing this. So we had a bit of a chat about it and decided that we would have a new target, which is to try and pay off our mortgage by 50, by the time I'm 50. I think this is still pretty ambitious. It would require consistent overpayment of like 20% on a mortgage. But I also I was incredibly excited about it for probably the first time ever. I thought about I just keep my mortgage there and use it as a store of value and all the rest of it. My wife would still consider doing an equity release if we were purchasing a forever home, like a big 4-bed in the suburbs somewhere or something like that instead of our London flat. So I'm not necessarily expecting that we will pay off our mortgage by 50 because so much might change in that time. I don't know. But actually, I think having that as a target to motivate me especially, but also my wife to continue sort of focusing and overpaying is awesome. So we'll see how we go with this anyway. I'll add it to my sort of proper long-term targets, and then we'll just see how we do. But yeah, like I say, we've been overpaying the better part of 20% for I don't know 6 months now. And it just sort of dawned on me recently. And then when I ran the numbers, yeah, it was a nice conversation. So that was awesome. In terms of work, so I had a couple of important sessions with people. I won't go into too much detail because obviously it's somewhat confidential and etc. But it was really positive. I basically gave a presentation to my boss and my boss's boss, who's the CEO, and he was concerned by some of the things I was telling him about like deadlines and things like that and what was going to be arriving. So then he sort of kicked the tires a little bit, and then I had a few very useful conversations and sort of things started to move. So that was awesome. And now I feel much better about it. So we have an important call on Monday the 4th. I'll be on that, basically giving yes, no for my area. But one of the things I've already sent before I went on holiday was basically an overview of what I need to see to sort of sign off on the next stage of phase 2. So that should be good. I'll catch up on emails over the weekend and then see where we're at. I also had my half-year review with my boss. I got 3.4 out of 4. When I give my scores, I only get to pick whole numbers. And I was really on the fence between 3 and 4 and gave myself a 3, but specifically put in the comments that, it's pretty close to a 4. I don't think I'm quite there yet. But, so I like, if I was to pick like a decimal place, I probably would have gone for like 3.3, 3.4, something around that, on the assumption that 3.5 would presumably be rounded up and just sort of eke into 4. But this makes a bit of a difference for my bonus in terms of the multiplier. So, basically if I get 3 out of 4, I get 15% of my base salary, which is not trivial. And if I get a 4, I get 22% of my base salary. So it's basically worth like thousands to try and nudge it up. As well as the fact, like in the past, I was getting excellence. Then I had a daughter and other focuses and sort of just drifted a little bit for a few years in terms of my performance. And I really want to get back to being excellent again. It's kind of an important thing for me. So yeah, I enjoyed my chat with my boss. I think he's perceptive and reasonable and communicates. So it was a fairly easy half-year review, honestly. And we were very aligned with what next steps. So that felt really promising. Hit revenue assurance targets. I mean, we basically smashed them. I'm really pleased with the individual who's leading this department. I won't say anything else, but I'm doing some work to sort of make sure that she gets recognised for it. You can probably read into the lines what that means, but that's ongoing. So really pleased for their performance. We've got a couple of months now where kind of linked to the phase 2 work of the new billing system. I need their team to sort of help me with some other stuff. So I expect that to sort of stabilize for the next couple of months before we sort of have opportunities to target additional wins. But yeah, to have already met that sort of 8 months into the year is awesome. PTC reduction, propensity to contact. This is another big focus at the moment. So effectively, we're a bit stalled just because we're waiting for phase 2 and then a few other bits of work as well. But we've now created our dashboard. Next steps to me are quite clear. And again, we have a follow-up session on the 4th, a different meeting, but I'm apparently going to have a busy Monday, so it is what it is. But I'm less frustrated than I was apparently when I wrote that last comment a month ago. Things are definitely progressing positively here as well. Team organization. I mean, I've completed this now. I've got 2 newish people. One of them I'm going to be doing his probation next week. He'll pass with flying colours. He's my direct report, actually. And then the other person is not my direct report, but they've been with us for a month, and I understand they're doing very well, so that's excellent. I also did my half-year reviews for my direct reports. No issues. I'm happy with them, so that's awesome as well. And then last but not least, in terms of work, this end-to-end data reporting. So basically, at the moment, like data is discrete and disparate and all over the place. So is one of my focuses to try and bring that all together. I had a couple of like meetings with the financial guys, so the FD and his team, and that was really positive. So we're sort of looking at sort of debt forecasting, how we reclaim bad debt from HMRC, Taxman, as well as sort of how we reconcile and recognize revenue in the correct reporting standards. So that was good. I mean, at the moment, all this stuff is happening, but it's so manual and really painful, and no one wants to be doing it. So we've all got sort of a soft target for the end of the year. Nobody seems to have this in their bonus, so but everyone really wants to do it. So it's sort of an interesting dynamic where it's good though. It feels like people are taking part because they want to. In terms of fitness and well-being, so I attend gym twice a week. I think I've done 6 over the last 4 weeks, so definitely below target. I'm not quite there yet. I have started to sort of do harder sessions, and I do sort of feel better for them. But I think my weight is broadly about the same, especially because I've been with my in-laws for a couple of weeks. So, been fed cake and everything else. But I haven't weighed myself for a while, so we'll see next week. I'll do a formal weight, and yeah, I still want to get under 100 by Christmas. But I'm going to have to start moving to make that a reality. I would say that taking care of myself in terms of regular sleep is especially the big one. A lot better over August. Part of it was just because I was so tired, like I couldn't not sleep. And then even when I've been away on holiday, like the first week I was working, and even in the second week I had one day where I was working. But broadly speaking, when I've not been working, I've been able to properly switch off, even though I've been doing some late nights. So that feels good from that perspective as well. Also, as well, whilst I've been over in Poland, my wife and me have basically been prodded by a bunch of doctors. So, I had like my bloods taken, which were broadly positive, slightly high cholesterol, but other than that, like my iron is fine. My thyroid apparently is amazing. Awesome, and a few other things as well. But broadly speaking, it told me that I'm a little bit podgier than I should be, which isn't really a surprise. But outside of that, it was good. I also got my back checked as well. My older sister had skin cancer when she was about my age, so it's something I'm a bit sensitive to. But basically, doctor told me I was fine, so that's excellent. But it was good to get a sort of. I mean, it's one of those things that I don't know if it's all men, but I think it's more common for men to not necessarily take care of themselves. I probably am a bit old school in that regard as well. So I kind of rely on my wife to sort of book the appointments and things. I know I shouldn't. I know I should like take more accountability for myself, but it's good that she's helping me do that. So that was really pleasing from that perspective. Outside of that, wife and daughter. So I had my anniversary in August. Honestly, we didn't really do anything, and actually, my mother-in-law that reminded my wife it was actually our anniversary. So again, we were busy at the time. I'm kind of hoping that we will have time to do something in September when it's also my wife's birthday. But we sort of said happy anniversary and all that other good stuff, and that's 9 years, by the way. So time definitely flies from that perspective. And again, as I sort of touched on a second ago, like some good quality time with my family. Went to a water park twice actually. Been to the beach and the various parks a few times, and just sort of been enjoying some good quality time together. So that's been good. Caught up with one of my other sisters, and basically going to go and visit them toward the end of September. Also, my this sister in question shares a birthday with my wife, so that's always slightly awkward, but it is what it is. Going to swing past my aunt as well. So we're doing basically some planning, so that should be good fun from that perspective. In terms of friends and connections, not a ton here, just because I haven't really had time for too much socializing. I did review somebody's CV on Discord. I should be giving them a final review on their version 2 this weekend. This is something I think I'm up to about 10 CVs that I've reviewed. I personally find them really rewarding. I don't charge people anything, so if anyone is in Paul Briscoe's Discord and wants their CV reviewed, just ping me. Again, I've been interviewing and reviewing CVs for long enough, and I have a pretty well paid job, so I think it's one of those things I'm quite good at. And I really find it rewarding when sort of like literally actually this week somebody's CV I helped write 6 weeks ago or so was like, oh yeah, it looks like I'm going to have a new job, like a 25% pay rise, and I feel really good about that. To be honest, I find it really motivating. So I'm doing one at the moment for a guy called Robert, and yeah, so that's taking shape as well. So that should be good. And on, like I said, I actually enjoy that. So it's an open offer for anyone who's made it this far in the video. And then professional. Kind of interesting actually. I've been approached quite a lot on LinkedIn. One of them especially is an agency that I've worked with before, a recruitment agency. So and what I do is quite niche, so I do tend to sort of keep up to date. But even though I have no plans of changing my current job, I did get a fairly meaty offer for like another position, which again was like 30% on my salary. So it is one of those things that it's not always the easiest thing to turn down flatly. But it wasn't good enough. And to be honest with you, I still sort of see myself as having work to do in my current job, and I'm enjoying it. So that's the important thing. But I will be going for a couple of meetups, including lunch. Somebody's taking me to a nice lunch, so that will be nice in September. So that's good. Regular YouTube videos. I mean, what can I say? It's my first one in a month, so definitely behind where I wanted to be there. Studying Polish has at least been useful whilst I've been away. I have been trying to speak a lot more Polish. I find speaking Polish really difficult because, first of all, I'm not super confident in it at all. But secondly, like there's a bunch of rules and stuff, so it's just difficult to sort of work out, like the ending or the three different plurals. Lots of different genders. Past tense is interesting as well as the other considerations. Then there's a couple of cases that you need to think about. So by the time I worked out what all the caveats are in a sentence, it's already moved on to a different paragraph. But I try and read stuff as well whilst I'm here, and try and listen as well, which is a little bit easier. So that's been good actually. And my wife was actually saying, because I sort of I find the word peach in Polish very hard to say. And when I was trying to order something for my wife, like I think that the lady behind the bar basically knew that I wasn't English, so started to speak to me in English, and I was like, oh man, I was trying to like practice and everything else. But even my wife was like, oh, it's good you're practicing, right? That you're trying, etc. So that's that. So at least it's appreciated. I have now started to think about a couple of ideas, actually written down three, although they're fairly note heavy at the moment, stories, but that's been sort of something I've been doing creatively whilst I've been away, and actually kind of running some ideas past my daughter. Not that she really knows this, but I'm sort of like, is she enjoying this as a story idea? And then we go from there. So I'm going to try and like start writing this because again, I still want to try and have something this year. And yeah, I mean, the date here says the 30th of the 9th. I don't expect to publish a story by the 30th of the 9th, but I want to have a formal version that I can kind of start looking for illustrators for by the end of September. So I think actually we should be good for that. And then regular reading. I have actually read a couple of books whilst I've been away. The most interesting one has been a book about capitalism, as well as a book on, I guess, psychology, or psychiatry. So that's been good as well. So yeah, actually, my regular non-reading has been improving, and previous. I've also been getting back into history, so some of the more modern history or military history has been good. Oh, and the other book I also read Julius Caesar, which is funny. I actually read it about 15 years ago, but I read it again and again. It's just super funny. Like if anyone hasn't read it, I think most people will know Caesar. But he has one of the earliest sort of semi-autobiographies, but the way he speaks and stuff is just hilarious. As well as, by the way, like Caesar is a genuine military genius. So there's some really interesting sort of insights into how he's thinking and what his approach is. Like that's not like a rumor or anything. Some of the stuff he does, especially in Egypt, is incredible. So I think it's good. At Angkor, where it's maybe a bit more known, some of the cool stuff he did, but I think the cleverer stuff actually happens in Egypt. And yeah, he writes extensively about everything, so that's super good fun. But that's everything. So again, a pretty mixed picture here. I guess on reflection, it's mostly moving in the right direction. I still have work to do about my fitness and wellness, but again, I think I'm gradually getting there. Yeah, I think I'm gradually getting there. So I think I probably feel more positive overall than my last update on this slide, and we just have to keep at it ultimately, so we'll see. Anyway, I think that's everything I have to say for now. I'll try and make this slightly more regular in the future. As always, any questions, etc., normal stuff in the comments below, and I'll get to them when I can. But again, especially if you made it this far in the video, thank you very much, everyone. I've been the Boss Hog, and good luck with everything. Bye for now.